Hello friends, in this video we will solve problem number 14 under self-practice question under relevant costing. Let us just see what they have provided us. A research project to date has cost a company rupees 1,25,000 and is under review. It is anticipated that should the project be allowed to proceed, it will be completed in about 1 year and can be sold for rupees 2 lakh. The following additional information is available. Materials have just been received for rupees 30,000. These are extremely toxic and if not used in project have to be disposed of by special mean at a cost of rupees 7,500. Labor which is costing 37,500. The men are highly skilled. If they are released from the research project, they may be transferred to another work department of the company and consequently the sales could increase by rupees 75,000. The accountant estimate that the prime cost of those sales would be rupees 50,000 and the overhead absorbed, which are all fixed, would amount to rupees 12,500. The share of general building expense, that is rupees 17,500. The managing director is not sure what is included in this amount, but the accountant staff charge similar amount each year to each department. You are required to advise whether the project should be allowed to proceed and explain the reason for the treatment of each of the amount above in your analysis. Now for this question, first of all, we need to find out the relevant and irrelevant information. Once we are having the relevant information, we will be comparing relevant revenue with relevant cost. That is how we will be calculating relevant gain. If the relevant gain is positive, we will go for the project. If the relevant gain is negative, then we will be dropping the project. So let us just go for the solution part. Let us just first have the statement where we are having the relevant and irrelevant information. For that, we will be visiting the question again and we will be trying to figure out relevant and irrelevant information word by word through the question. A research project to date has cost a company rupees 1,25,000 and is under review. Now we need to understand that this 1,25,000 is a sunk cost. The reason is that you have already incurred this cost. Whether you go for research project or not, you won't be having any way of recovery of this cost. So it will be considered to be irrelevant item. So we are having project cost till date, which is not relevant. The reason is that it's a sunk cost, and in amount column we will be having nil. Let us go for the next amount. It is anticipated that should the project be allowed to proceed, it will be completed in about 1 year and can be sold for rupees 2 lakh. That means if I go for the research project, it is possible for me to have a cash inflow of rupees 2 lakh. So this cash inflow is considered to be relevant revenue. So let us just write down that part. So we are having sale price of the project. It is considered to be the relevant, and this is cash inflow in case I go for the research project, and the total amount which I am going to earn will be 2 lakh rupees. Okay. Then they have given us the information regarding material. Material have just been received for rupees 30,000. Now this 30,000 is considered to be the sunk cost. The reason is that material have just been received. That means you have already made the order, and after order you have already received the material. Now whether you go for the project or not, this 30,000 you are not able to recover. What you have incurred, it is not going to change. So this 30,000 will be considered to be irrelevant cost. So just write down, we are having cost of material received, which is not a relevant item. The reason is that it's a sunk cost. So in amount column, we won't be having any kind of cost. These are extremely toxic and if not used in the project have to be disposed of by a special means at a cost of rupees 7,500. That means if I am not going for the project, I need to dispose of this material, and when I dispose of this material, I'll be incurring a cost of rupees 7,500. That means if I go for the project, I will be using the material in the project. I won't be disposing of. If I'm not disposing of the material, I won't be having the disposal cost. So there is a saving in disposal cost. Saving in disposal cost is nothing but the opportunity revenue. Opportunity revenue is nothing but the relevant revenue. And this revenue is possible just because of the project. So let us just write down that part. So we are having cost of disposal of the material. It is relevant item. The reason is that it is the opportunity revenue, that is saving in cost, and the total amount comes to 7,500. Labor. The cost provided is 37,500 and they have given us the idea that the men are highly skilled. So if the men are highly skilled, that means they are permanent in nature. That means if you pay them or if you go for the project, the payment of 37,500 is not going to be affected. So we need to understand that this 37,500, which is a labor cost, is an irrelevant item. So let us just write down cost of labor. It is not relevant as it is the common cost. Whether you go for the project or not, whether you go for the work department or not, it is going to remain same. And so amount column will have nil. If they are released from the research project, they may be transferred to works department of the company and consequently the sale could increase by 75,000. The accountant estimate that the prime cost of those sales would be rupees 50,000 and the overhead absorbed, that is all fixed, would amount to 12,500. Now we need to understand that if I am not going for the research project, I'll be using this highly skilled man in the work department. In work department, they will be able to earn the sales revenue of 75,000 with a prime cost of 50,000. So can I say they are able to earn 25,000 rupees contribution in the works department? Now 12,500 which they have provided, that is a fixed cost or the fixed absorbed overhead, it won't be considered. The reason is that it's an irrelevant item. So what I'll be having is the contribution of 25,000 if I am not going for the research project and the labor are utilized for the works department. Now if the labor are used in the research project, then it's not possible for me to have the benefit of that 25,000, and that is how I'll be losing 25,000, that is loss of contribution. Now here we are supposed to calculate the opportunity cost. Now opportunity cost will be equal to loss of contribution plus you will be having the wage cost or the labor cost. So in that case it will be 25,000 plus 37,500. So that is how you will be having 62,500. So let us just go for that calculation. So you are having contribution lost on alternative use. In that case it is relevant item, which is relevant cost. Now just see the calculation. You are having 75,000 minus 50,000 minus 37,500. This is also another way to calculate. That is, you have taken the sales, then you have taken the prime cost. From prime cost you have removed the wage effect. So that is how we will be having the contribution before wage. So it is considered to be opportunity cost. The formula is sales minus prime cost minus labor cost. So amount is 62,500. That is the contribution before the wage cost. The share of the general building expense is rupees 17,500. The managing director is not sure what is included in this amount, but the accountant staff charges the similar amount each year to each department. Now we need to understand that this 17,500 which we are having, it is the sunk cost. The way we are having 12,500, that is the absorbed cost, same way 17,500 is also the absorbed cost. So let us just write down regarding both. So we are having here absorb fixed overhead, which is not relevant. The reason is that it is the sunk cost and the amount is nil. Whereas we are having the share of general building expense, again it is not relevant, it is sunk. The reason is that you have already incurred, you are just allocating, again the amount is nil. So let us just have the total incremental inflow if the project is proceeded with. So in that case you will be having 2 lakh plus 7,500 minus 62,500. So that is how you are having the relevant gain of rupees 1,45,000. As the relevant gain is positive, our decision will be to go for the project. The reason is that we are having the positive relevant gain. Thank you.